To begin, let's look at the bigger picture. India today stands at an interesting point in its economic journey, navigating global shifts while continuing to create new opportunities at home. To help us understand what is shaping India's growth story and what it means for Indians across the world, may I invite Mrs. Lata Venkatesh, consulting editor, CNBC TV 18, to share her perspectives. Over to you, Lata ma'am.
You struck a very right note as we get into celebrating the 80th, the starting of the 80th year of independence. There is definitely an era, an atmosphere of resilience of growth. Look at the number of things thrown at us over the last, say, 12 to 18 months. We have had tariffs, we have had a war, we have had crude going to triple digits for a goodish bit, and recurrent problems in terms of the tariffs. Here today, gone tomorrow. Here today, gone tomorrow. But for all that, Aman, if you can go to the first slide that I have ready for you. There are times when I have felt that, are we in the, the 2004-2008 phase? That was one of India's really golden phases. We had 7.9% growth for FY04, 05, 06, and FY7 and 8. We had 8% growth. So, can you see the slide? I'm not able to see. That's why I'm asking. The comparison is compelling if you look at the current period. Just look at that. FY22, it's showing 9.9. Okay, you can ignore that because the previous year was negative. It was a contraction because of crude. But then look at 7.5, 7.2, 7.1, 7.7, 7.5. The average works out something like 7.4. This is the second most furious pace of growth we have seen since GDP numbers were kept. We are getting the data for first quarter of the current year, and the RBI upgraded its own forecast to 7. I think they are just catching up. It's very, very likely that when I do the poll, it will be between 7 and 7.5, and already I have 1.8, and not by a small person. It is by State Bank. So State Bank expects that kind of a number. Can we go to the next slide? I want to tell you that if we were second fastest period in terms of growth, we are in the fastest period when it comes to per capita income. Now just look at the number. Again, ignore FY22 because that's a distorted number. If you take FY23, 24, 25, 26, we are averaging something like 6.6, 6.65 in terms of per capita growth. Now, per capita growth is very important. In our country, because we want to feel good, we look at the GDP. In most countries, you look at per capita growth because you want to know per person how much is the growth. And if you looked at the other golden period that we had, 2004 to 2008, we were averaging 6 point. Now we are averaging close to 6.8. Of course, let me out with the secret. In that period, the first decade, our population was growing at 1.5, 1.6% per annum. Now we are growing at 0.7% per annum, 0.9 to 0.7 the last 5 years. So population growth has slowed. That's an advantage in terms of calculation of per capita. But nevertheless, that shows per person's ability to purchase. And that is why I would be very celebratory about it. When we go to the next slide, and why I am telling you that celebratory mode from the bottom of the pyramid is evident. It is evident in the number of people who are paying back their loans. Look at the period from 2000, again, 2001, I've taken 1-2 because it's a longer period. The first whole decade, FY01 to FY10. Look at the way in which you saw the NPAs as a percentage of total loans fall. Because there's growth, everyone, more and more people have a job, they're able to repay their loans. That's exactly what we are seeing between 2017-18 and 2027. A clean fall, and we have reached 1.4% as a percentage of total loans, gross NPAs, that is. That's clearly, this can happen only if people have the money to repay. Can we go to the next? Now, this is where we have to pay attention. I've put both those comparisons, if you can see, FY04 to FY08 and FY22 to FY26. What extent is GDP growth translating into earnings? Ultimately, you and I can't buy the GDP as a share. You can only buy shares or bonds. So what extent is it translating into an investable instrument? That is why we have to look at earnings growth, whether you're a debt investor or an equity investor. And there, in the FY0408 period, when we had an average of 7.95% GDP growth, the average profit growth of listed companies, I'm taking a CMI sample of about 4,500, 4,700 companies, that works to 35.5% average annual growth. And if you took only the Nifty EPS growth, it was 25.5%. So look at the current period, FY21 to FY22 to 26. Again, nearly 7.9% growth, 7.88, but it is 24.7% bigger universe growth. And even then, break it up even more. FY22 to 24 and 25 and 26. If you break that, then you see that although we have a 7.4% growth, the comparable is as good as 7.9, which we did in the first 5 years. 7.4 is decent, but look at the earnings growth. It's fallen to about 10%. Now, that is because of the number next to it, nominal GDP. Nominal GDP didn't grow much. So companies didn't have pricing power. That reflects the bottom line and the top line. Now, one is hoping, of course, that this period is ending. If you can look at the next slide, we are probably returning back to higher nominal GDP. As you can see, the average I'm getting is 12 to 13% average nominal GDP growth. That is GDP without deflating for price increase. We probably, therefore, will start to see earnings growth improve. I'll return to that topic in just a bit. Let's go to the next slide. All the earnings and their calculations is not with us because today is the last day of Q1 reporting season. The order to companies from SEBI is that you should normally report within 45 days of the quarter ending. If you are reporting after that, you have to take special permission from SEBI. So usually August 15 is a good time for us to look back. I don't have the entire data. So I'm just taking a study which ICRA has done a little earlier. They published this about 2-3 days back. They say that revenue growth of 838 companies that they studied showed a good 22% growth, but earnings was flat. And that is primarily because of oil and gas companies. They had to take the hit because government didn't want the prices to get passed on. And that, if you take it ex oil and gas, you have a solid 19% growth. And therefore, you may reasonably say that last year's 9 to 10% earnings growth is probably over. And this year, we will probably see, some at least 15% earnings growth. Oil and gas is one culprit. Construction is also a culprit because many of our construction companies have a West Asia exposure, like Larsen, Case International, Calcutta. So those companies also tend to get hit in terms of margins and bottom line. So barring those, looks like our earnings will return. And now let us go to the next slide where we are looking at the overall GDP growth. I'm zooming out of earnings now and coming back to GDP. How is the rest of the year expected to perform? Q1, like I said, the RBI's betting has upped its number to 7. I'm very sure they are behind the curve. It will come at 7.5. We will get that number on August 31st. And SBI is standing at 8. SBI is perhaps more close to the number. It's definitely going to be 7.5. But Q2 to Q4, we may see a slowdown. And that is the risk we have from 2 or 3 factors. One is rising prices. If you looked at the corporate earnings, many of them have not passed on. So they will wait to pass on. Secondly, we have this slight El Nino worry. It is a lesser worry than it was, but it is still a worry. So it's possible that Q2 to Q4 may not be able to see as ferocious a growth as we saw in Q1. But we are still going to end the year with at least 7%. And why do I say that with confidence? It's because of the next factor, Asian growth. When I speak to economists from across the continent, especially North Asia, but not only North Asia, even other countries in Asia are showing a very good capex cycle. And that is evident in the export numbers we got even yesterday. engineering goods were growing at 30%, electronics at 30%, our exports at. If someone is buying them, it's obvious that those countries are doing well. The Asian credit group, loan growth, is at an 18-year high. That is the return of capex cycle. So over there, they are going through their 2004 to 2008 moment, or so it seems, because of the investment in data centers, in chip factories, in power. You see this very huge capex cycle. And then that can be a potential tailwind for India. Okay, now, maybe I'll have to hurry a bit. I'm running out of time. I'll move out of growth. If you go to the next slide, I want to speak about inflation very briefly. That's one thing that's been totally under control. The Reserve Bank's estimate is that core inflation will remain at 4.3, and that's the guiding factor. The fuel will move a bit because of extraordinary factors, and the RBI is looking at the underlying inflation, as they said in the August 5th statement. And therefore, the expectation of a rate hike from RBI is very limited. It was about 50-50 up until August 5th. After reading the Reserve Bank governor's statement, market is moving more to perhaps a zero hike or a hike getting postponed to next April, not perhaps this time. The Fed's hikes are also looking less because of very benign CPI and PPI print. CPI print came day before yesterday, PPI yesterday, today retail sales. All of them are below market estimates or equal, and therefore an expectation that Fed also will not, which means dollar will weaken. Now that brings us to the rupee. When we talk about dollar May weekend, we have to talk about rupee. That's the next slide. The rupee in FY27 is widely seen as already having passed its worst. The big slide is done. And why do I say that? Because the expectation is that this FCNR moves alone are going to bring in some 70-80 billion. The Reserve Bank has shut its door, has closed the door early. We got that announcement an hour back. They've collected 52 billion by way of FCNR deposits and another 5 billion in terms of external commercial borrowing and overseas foreign currency borrowings by banks. So 57 billion is in the kitty. And by December 31, when they will have more ECBs and OFCBs as needed, the expectation is that they will be comfortably off. Why am I saying 80 billion is comfortable? Because we have to look at the current account deficit. I'll come to that in just a minute. I'm just giving you guesses I'm getting from the market in terms of where the rupee may head. Our next speaker is the expert on that. I would normally consider him my on that issue. Where is the dollar rupee headed? But I do get guesstimates from the market that the rupee can strengthen to 93, and many of them expect it will be in the 94 to 96 range. That is, it strengthens to 94, but as you get to the end of the year, it's possible that it may be allowed to weaken a bit by the Reserve Bank. In any case, we are going to see some period of strength for the rupee, also because of dollar. Now, if you can go to the next slide. Why did I say 80 billion was a lot of money? Because it cleanly meets the current account deficit. Yesterday, we got the July exports and imports number, the trade numbers. And look at the export growth from April, May, June, July. Like we all know, we've gone through the most tumultuous times, right? We had still the tariff sitting on our head. Here today, gone tomorrow, the way President Trump speaks, the crude had gone up to 3 digits. Hormuz Strait was knocked out for us. And the GCCs, the Gulf Council, it's a very big destination for our exports. We were not getting that as well. Containers were a problem. Shipping insurance was a problem. And look what we have notched up. 17.3% export growth for each of the 4 months. 1 month we touched even 20% growth. That is July. That indicates the strength of the growth. Even then, if exports are growing and imports are also. And that's because of crude being one thing. And that deficit is going to be about 40 billion by the time we come to the end of the year. The current account deficit expected to come at 1% of GDP. 1% of GDP works out to about 40 billion. And we have 80 billion coming only by way of FCNR and ECBs. Therefore, it should be met. We should not have. We will have a surplus, a capital surplus. We can go to the next slide, please. What we should, FCNR is an unusual arrangement from Reserve Bank. The normal flow of FPI has become somewhat positive. If you looked at the last 4-5 years, we've had a very deep cut in 2025 and 2020, FY25 and FY26. As you can see in equities, debt has been positive all through. The brown line is the debt. And if you look at the current year, I've given you the month-wise bar. Here we had a terrible 4 months from March onwards. February was very good when we thought that all those Liberation Day problems are over. But then we got a series of bad news. And then it is now steadied. So my sense is foreigners are taking note of the turn in the earnings. That is why the sell-off of India is over. And they will probably turn buyers as the quarters show better and better earnings. Debt, of course, will depend on whether we get included in the Bloomberg index. And that looks a likelihood in the next meeting. So even that will start growing. So we won't need extraordinary efforts like FCNR in the coming years. It looks like FPI flows, debt and equity will be able to meet our current account deficit largely. Let's go to the next slide. We are just coming to a close. What are the worries? For the dollar flow itself, the worries are that if we think our 19% earnings growth is a damn good number, just look at the S&P 500 earnings for the quarter that is just going on. Even their earnings season is on. You know what is the earnings growth? 50%. And why is that? Because of the chip companies all reporting like triple-digit earnings growth, the NVIDIA types. And that is giving them a price to earnings of 20 times. It is a little more expensive than their historical average. Historically, they are 90x. Now they are ruling at 20x, but then the earnings growth is also excellent at 50% earnings growth. What's the Indian earnings growth? I just told you. It was 19%. And our PE is subdued, come down to 20. Our 10-year average used to be 22. So we can be considered attractive at this point in time. That is why I am betting that the worst flow of FPI sell-off is over for sure. It is not that a large amount of money will come, but it is certainly going to be positive. That's the Nifty valuations I've given you, and the Nifty 500 valuation, which is still a little expensive because mid-caps have done very well. So the FPI flow outlook, according to me, equity flows may be modest, but if the Bloomberg index inclusion happens, we are going to see decent debt flows. Next slide, and that would be the last. What are the other ones? I think it's a superb growth story we have with us, but we have to keep some red flags in mind. Maybe small worries. One of them, of course, is geopolitics. I wouldn't worry about that much because we have tided over it so wonderfully. I would worry more about policy and unpredictability. Now we have the Russian sanctions bill that's been passed by the Senate. These kinds of irritants, we do not know how serious they will be. And I would continue to worry about that. The longer term worry is AI. But I can say with some confidence that the AI wave as a threat to our jobs immediately is clearly received. There is, recently a study by Goldman Sachs. They've looked at the AI sensitivity or vulnerability of all Indian professions. And they say only about 8 to 12% of our non-agri professions are replaceable jobs replaceable by AI. About 30-40% is actually complemented. Productivity improves because of AI. And another 40% is not affected at all because there is heavy labor, construction, textiles. The AI has no role. So maybe the job fear is overdone. And likewise, the competition of AI stocks as a competition was, I just told you, the earnings growth of US companies. That also may receive because of the very heavy capex investment that we are seeing. And at some point in time, that debt will begin to tell. We may have some serious consequences because of over-leveraging. My final point would be that I think the Indian government should wake up to the very wide difference between equity and debt taxation. Time they toward the debt taxation. But that discussion is for another day. For the moment, I can think that the worries are there, the red flags, but this is a very decent crude story. And the big worry of rupee and FPI flows are absolutely. Thank you.
Thank you, Lata ma'am, for putting India's growth story into perspective and helping us understand the opportunities as well as the larger global extent. From the macroeconomic picture, let us now move to the banking and financial landscape. It is my pleasure to invite Mr. Ashish Parthasarthi, Group Head HDFC Bank, to share his perspective on India's financial ecosystem, global markets, and what these developments mean for the NRI community. Over to you, Ashish, sir.
Thank you. Thank you very much. Good evening to all. And firstly, thank you all for joining us on this webinar. We just heard Lata, I think, a very lucid presentation and also balanced one. We what this comes out very clearly that we continue to be one of the fastest growing large economies. We think on the rupee as well as on the current and balance of payments, we'll see much more stability. The only issue is possibly especially with equity, we may not be the best investment destination at this point in time because there are other stories which possibly offer higher returns, and that's what we have seen in terms of flow. So thank you, Lata, for that. Now let me come to our bank, right? So HDFC Bank, all of you know that, but let me just reiterate. We are India's largest private sector bank by assets, by customers, and by overall franchise strength. Our balance sheet today spans across retail, wholesale, payments, and digital channels with a scale and resilience that has grown steadily year after year. Our deposit book and loan book remain diversified and well capitalized, and we continue to lead in segments such as retail liabilities, payments, and customer acquisition. In fact, if you see the quarter which has gone by, which is the April-June quarter, we garnered the largest amount of deposit compared to any bank in the country. We were the largest deposit gatherer. So that's the faith customers have shown in us, and that's something they like to bank with us. If you see our recent investor presentation, a few things stand out clearly. The consistency of our performance, the strength of our margin, and the disciplined risk management, and the expanding customer base across geographies. We have over 100 million customers today, and it's across geographies, both domestic as well as the NRI. For the NRI and PIO community specifically, you represent one of the most vibrant and financially sophisticated customers who we engage with. Your global exposure, your professional success, and your commitment to staying connected with India makes you uniquely positioned to benefit from opportunities here. Over the years, we have built a comprehensive platform from NRE, NRO accounts to remittances, investment solutions, wealth advisory, and of course, FCNR deposits, all designed with your convenience, regulatory clarity, and long-term financial planning in mind. Please, we were, on March 31st, we were the second largest bank in terms of NRI deposits, and we thank you for your faith in us. Lata has talked about effects in the global market outlook, but basically I don't want to then go into details, but what we are saying, we should see stability on the rupee because we think the worst is over, and whatever in terms of exports, in terms of current account deficits, and the FCNR scheme which has been announced will help us on the balance of payments, thus reducing pressure on anything that was happening to the rupee, what we saw in the last few months. So what are we looking at? We had a swap window in 2013, and now we have in 2026. So let's look at what was there and what is today. Many of you may remember the 2013 window when RBI offered banks the ability to raise FCNR deposits with favorable swap terms to support the currency stability. And HDFC Bank played a significant role then, raising meaningful flows and helping strengthen the market. In 2026, we are again in a similar phase where the RBI is encouraging stable foreign currency flows. This creates a compelling opportunity for NRIs because the swap mechanism allows banks like us to offer very attractive FCNR rates in various currencies. This window doesn't stay open forever. And as Lata said, now that window ends on 31st August. So the time remaining for, anybody to take benefit from the, RBI swap window scheme is till 31st. If you see, we have not seen FCNR dollar rates, say, for example, 6% plus. We have not seen such rates for, I think, more than a decade. Right? And we're unlikely to see them after 31st August. So if anybody wants to take advantage of that higher rate which banks are offering because the swap window is there, I think, the time is till 31st August and you need to act now. So in summary, India is strong. The banking system is resilient. HDFC Bank remains firmly positioned as a leader. The rupee market is stable, and the current RBI window has created a unique moment for foreign currency deposits. We are here to support you every step of the way, and today's session, we look forward to helping you make informed decisions aligned to your financial goals. And just want to remind you again that the window closes now on 31st August 2026. Thank you very much.
Thank you, Ashish, sir, for those valuable insights. We have understood the larger Indian opportunity and the banking perspective. Let us now bring the conversation closer to our NRI customers and what these opportunities can mean to them. For this, I invite Mr. Ajit Pandit, NRI Product Head, HDFC Bank, to take us through the NRI banking proposition, FCNR, and the relevance of the current swap window. Over to you, Ajit, sir.
Thank you. Good evening, good morning, and warm welcome to our diaspora joining us from every corner of globe. This is the big thank you from the country. Okay, you have given a lot of contribution to country. You are proud for us. You have already basically have given your expertise in your areas of specialization. Make it country as a proud. As a token of appreciation, country celebrates Pravasi Bharatiya Divas on 9 January. We can't forget your contribution to the country. Whenever country has given you call, you always has rushed for the country's help. You are remitted money to India for India's growth story. In 1992, there was India Development Bond. In 1998, there was a Resurgent India Bond. In 2004, there was the India Million Bond. And in 2013, 2000 FCNR swap. That time, country collected more than 26 billion. HDFC Bank collected 3.3 billion. So your contribution cannot be forgotten, and you are always recognized as in our Dil. It is called as Dil Hai Hindustani. And we always welcome whenever you come to India and you come to our bank is there to help you for your all financial needs. Secondly, you have given immense proud feeling to country, and country has given a lot of opportunities to make investment in India. I'm sure you are looking at Indian economy, Indian digitalization progress. You see the UPI, each and every resident Indians through the rural economy, rural sector, everybody are familiar with the UPI, and we are moving towards the cashless. Everybody use the UPI even if the education level, whatever maybe, but they use the UPI payment for all settlement. So this is an opportunity to explain me about the FCNR deposit. I'm sure I know everyone knows what is a FCNR, what is a swap window, but here is the opportunity. I will start with the basic concept of the FCNR deposit. What is the FCNR deposit and why it is paid for? FCNR deposit is a foreign currency non-resident fixed deposit which is offered only to NRI and person of Indian origin who stays outside India. Deposit and interest maintains in respective foreign currency. There is a protection against the rupee fluctuation. There is a no any risk against the forex market, a fluctuation against rupee, dollar, and so money remains in dollar and deposit booked by you permissible currency which is allowed by RBI from time to time. These deposits are under RBI's master direction and specific regulations. Who are eligible to book deposit? After opening this swap window, we started getting queries from any who can participate. So, how can India forget your contribution to the economy? So, NRIs who are staying outside India, mariners who work for the foreign shipping company, our corporate employees who goes abroad for the projects, person of Indian origin, they are taken a citizenship of outside other country who stays outside India holding the OCI card, they can take the benefit. Who cannot participate? A resident Indian or non-individual entity registered outside India, they cannot book the fixed deposit under the FCNR swap. So, my dear all NRIs and PIOs, this is a golden opportunity to invest your money in the safe, secured instrument. Document needed for opening account, your valid passport, your valid visa or your OCI card and one of the address proof. PAN is there? Yes, you can give the PAN or Form 121. So these are the simple documentation. Now the who can be joint holder in your FCNR deposit? NRI can hold NRI PIO in joint name, in single name, as well as the other NRI PIO can hold in joint name. A resident close relative can be a joint holder in this deposit, but the mode of operation will remain as a former or survivor. We as a bank always recommend to all our customers to have a registration of nominee in your each and every account. So in this deposit also, we recommend, we accept the nominee from nominee can be non-resident, nominee can be a resident individual, nominee can be a minor. Most of the NRIs ask the question, what happens to my FCNR deposit when I come back to India for good in between the deposit gets run? Yes, Reserve Bank has allowed this FCNR deposit can continue till maturity at contracted rate. There is no change in your FCNR interest rate. On maturity, you have option to convert this deposit into the resident foreign currency deposit or convert into Indian rupee. Now, these are the three popular types of accounts normally NRI holds in India. So these are the you are aware of. These are the FCNR, NRE, and NRO. FCNR account is held in foreign currency. NRE is a non-resident external account, is held in Indian rupee. NRO is a non-resident ordinary held in Indian rupee account. Currency risk, FCNR, there is absolutely zero currency risk because your money remains in foreign currency. Okay, so there is no any exchange risk. NRE, yes, money comes from abroad. You convert into Indian rupee at the exchange rate, and there is a currency risk exposed. If you see the 15-month back, the conversion rate was 85 rupees, which has come to 96, and NRO is also rupee account is exposed with the currency risk. Beauty is that interest earned in India on FCNR NRE is totally tax-free in India. So whatever interest you earn is totally tax-free. NRO interest earned is a taxable in India. You can file your return to get the refund if your taxable income is not the perpetual limit. Repatriation, important point. All NRIs PIO invest in India for the repatriation benefit. So NRE, FCNR are fully and freely repatriable without any limit. You can, whatever money you got in India, add the interest, take the money back to your overseas country, whichever you want. NRO account, there is a limited repatriation facility that is up to $1 million. You can repatriate from NRO balances. In addition to that, if you earn any interest, rent, pension or dividend on your investment made on non-repatriable basis, that also after payment of taxes you can take out. So these are the, and who it is the best, it is a foreign savings is best for the FCNR type of account. Foreign income who was earning abroad and want to convert into Indian rupee, the NR is preferable. NRO account, whatever the legitimate dues you are getting in India, that is the best suitable account for NRO account. Now, let me tell which are the currencies HDFC Bank offers. US dollar, Euro, GBP, Canadian dollar, Australian dollar, Japanese yen, and Singapore dollar. These are the currencies we offer to book FCNR deposit and earn interest in foreign currency. So you have the option of this deposit, half yearly interest you can take outside India or if you want, or on maturity as a reinvestment you can take. So minimum tenure of the FCNR deposit is 1 year, maximum tenure of the FCNR deposit is 5 years. If you break before 1 year in normal FCNR deposit, you don't get any interest. And best part is that HDFC Bank do not charge penalty on premature break of the FCNR deposits. So now RBI has come with the swap window. What is that meant for you? How? And this FCNR how the FCNR can be booked? You can make the inward remittance from abroad. You can debit NRI Rupee savings account. You can give the foreign currency demand draft or check to book the FCNR deposit. Whenever you come to India, foreign currency cash also you can bought, declare on the get the CDF and come to branch and book the FCNR deposit. As I said, RBI swap window, he's basically come up with the special facility. It started on 9 June. Initially, RBI said it was a 30th September with the closure date. But today evening, RBI said 31st August 2026. There was an overwhelming response from our beloved NRI and PIO for contributing this money in India. So there are still 15-16 days. We will strongly advise you to remit the money in India and book the FCNR deposit. Why FCNR under swap deposit? Because you are going to get interest, okay, which is a high interest rate you are going to get. Your 3 year to 5 year is the swap rate. We are going to swap with the RBI. Look at the rate of interest, US dollar 6.25. I don't think ever any economy, any country is offering such a fantastic interest rate. Okay, 6.25 is the good. If you compound for 5 years, you will get more than 7.24. So these are the currency: USD, GBP, Euro, Australian dollar, Canadian dollar, and Singapore dollar. I don't think in world any country is offering such a fantastic rate. I must say, whatever your saving is there, you should book the deposit for this tenor and get the higher yield. Now, we have for booking the deposit, you can always reach out to your relationship manager, branch manager of HDFC Bank, NRI phone banking you can connect, branch in India you can connect, or you can write an email to our FCNR swap and hdfcbank and .in. One thing I would like to tell, HDFC Bank is internationally also present. Our representative office is in Abu Dhabi. We are at Dubai. We are DFC Dubai. Our branch is in Singapore. Our branch is in Bahrain, and we have also Singapore branch. We also have a London office. So internationally, we are available. One of the leading for India's private sector bank in NR segment, having more than 1.2 million customers. You can make it our digitally also. We are giving various kind of services. With this, my request is that don't miss this opportunity. Even if last 15 days, try to book that even smaller deposit and block your money for 5 years to get higher yield. So these are our NRI banking services related information. Thank you.
Thank you, Ajit sir. We have heard three very interesting perspectives, and now it is time to bring them together. Let's move into our Q&A session and explore some of the 400 plus questions that were sent by all of you, out of which we have taken the ones especially relevant for global Indians today. Let us begin with Mrs. Lata, ma'am. The first two questions are for you, ma'am. Given the current global economic environment, what are the top two macro trends NRI should watch over the next 12 months? And how could they influence India's growth trajectory?
Okay, like I said, one trend that has astounded me, and that doesn't look like going away anytime soon, huge capex cycle. We're seeing it in the US, of course. We're also seeing it in Asia. And that is a big tailwind for India's growth. We do not realize how every time we have shown excellent growth, it has coincided with global growth. So the ambience is such that there is a massive capex cycle happening, and you're going to see that reverberate in India. You're going to see power investments. You're going to see the entire chain of power, transmission lines, grids, etc. in the uh, transmission distribution. Likewise, you're going to see data center investments. So a capex cycle is underway in India. It's restrained when you look at it. It's not companies getting over leveraged left, right, and center. But that is one very important thing that you have to watch out for. That the Asian capex cycle is strong, and India is going to benefit from it. The worry because of that, since you asked for, I thought you said top two macro trends. The second trend I would watch out for is therefore whether there will be some accidents along the way. Over leverage is happening. And while banks will be very careful globally, are hearing about private equity perhaps getting over leveraged. And, when in this every day, you hear the Mag 5 or Mag 7 or some of those other companies raising 50 billion, 100 billion. Just the Mag 7, Magnificent 7 companies, it is 800 billion in terms of money they have raised for capex. So lesser mortals will not be that sturdy in terms of their payability. I would just watch over, since you are NRI investors, maybe investing in AIF kind of instruments all over the world. Private equity is something, especially private equity invested in not private equity, private capital invested in debt. Just watch over, be careful what you do.
Thank you, ma'am. The next question for you is, how is India positioned compared with other emerging markets in terms of resilience and future opportunities, particularly for overseas Indians considering where to allocate their long-term savings?
Saying resilience, then I think India compares brilliantly vis-a-vis other countries. The resilience comes from the sheer breadth of industries and companies that you can invest in. I mean, ultimately, Taiwan is a one-stop wonder. It's TSMs and maybe a little bit of PSMs. Okay, Korea may have a few more because they have Samsung. They're a little better diversified. But we saw, how much Korea went up and down. What was it? 30% of highs in the Korean stock market. So, when it comes to resilience and sturdiness, India will stand out. There wasn't that mayhem of rise, and therefore it has been a controlled fall. All Asian countries have fallen. We've fallen much less than others. I would therefore pick out India for resilience. And long-term savings, I would really think that Indian debt is very secure. Debt as well in equities. I mean, there is undervaluation, especially in the financial space in India. Big banks, NBFCs. I would think that they are not at their historical valuations if you look at them. The mid-sized banks, PSU banks, there is still a runway available in these. And even in consumer durables, FMCGs, mid caps perhaps are showing signs of overvaluation here and there. Certainly not froth, but overvaluation. Large caps like a safety.
Thank you, ma'am, for insightful words. The next two questions I have are for Ashish sir. Ashish sir, with interest rates and global liquidity witnessing shifts, what is your near-term outlook for the INR and India's rate environment, and how could this shape NRI's inflows?
Thank you. I think Lata did cover this, and I did also mention it briefly. In the near term, we have seen INR to be extremely stable, right? And there was a time when there was a large depreciation, but I think we are of the view that worst time is over, and you can see why, right? Because the economy is very healthy. We have very strong reserves. And our policy management has been very, very prudent, whether it be FX or interest rates. So, we have seen our interest rate environment remaining broadly stable, right? Our inflation is also very well controlled. So, and we've seen, as data showed, that growth has been very good, very strong. So if you put all these together, I think, rupee is likely to be stable. I would go with Tata's, prediction of, say, it ranging between 93 and 96 for some time to come. And what does it do for the NRIs? It just reassures them that, if you're putting money into India or you're putting savings into India, you are putting it in an economy which is strong, which is stable. Management of the economy is, very, very prudent. And so there should not be any hesitation of, what uh, the economy looks like, what rates look like. I think rates are more or less stable, except for this, higher rate on FCNR deposit, which will, because of the concessional swap window, and that's why it will be there till 31st August. But other than that, I think, we see India economy is strong, resilient, and stable.
Thank you, sir. The next question for you, sir, is could you explain why the current RBI swap window is significant from a treasury and stability perspective and why its timings matters for NRI deposits?
So if you see, obviously, what does FCNR deposits do? They bring good stable deposits. The swap window is for 3 and 5 years, so you're getting 3 and 5 year money at rates, because the swap window is at concessional rates, and there are some other advantage in terms of forbearance on NBC, no reserve requirement. It provides banks with a stable and, reasonably, I think, economical source of money. Right. Secondly, if you see at this point in time and for some time, credit growth in India has been very strong. The economy is strong, credit growth is strong, and it's been outpacing the deposit growth. So this deposit, an additional deposit which wouldn't have been there normally if the FCNR window wouldn't have been there, will bring a lot of stability to all banks' balance sheets, because suddenly you will have a new avenue of depositors who, and which will change the growth trajectory of deposits in India. So to make it closer to the credit growth.
Thank you so much, Ashish, sir, for your insightful words. I have a few questions for Ajit, sir, as well. Sir, for NRIs evaluating fixed income opportunities globally, what makes FCNR particularly relevant right now? And how does the swap window influence proposition?
Yeah. So RBI, while announcing this swap window, has given a lot of goodies to authorized dealer. First of all, the hedging, the cost, CRR, SLR is also waived. Priority sector is also waived. So that benefits we as a country, we are passing to the account holder, and therefore account holder is enjoying such a wonderful return 6.25 for 3 to 5 years, and none of the country will give such kind of the returns, and with the assurance your money is freely repatriable and maturity. If you see the history of India from 1992, 1998, 2004 and 2030, on maturity, customer got their maturity amount without any delay. So that shows India's banking system, India's growth story. That's, yeah.
Thank you so much, sir. And finally, Ajit, sir, what guidance would you offer NRIs when choosing the currency and tenure for an FCNR deposit during this window?
Yeah, good question. NRIs can book the deposit on various foreign currency. First of all, they have to see the liquidity also, when they will need the money, number one. Secondly, they have to see which currency is giving the higher yield. Probably US dollar gives the higher yield so far. So they can think about that. And one more thing, customer is planning to come back to India. Okay, accordingly, they should also plan to invest their money in case they come back to India Okay, their money can continue. However, whatever interest they earn will become a taxable from date of the return. In swap window, there is one condition. There is a lock-in period is of 1 year. So before 1 year, they cannot liquidate this FCNR deposit. That they have to keep in mind. Very, very important things. So accordingly, customer can plan and look at the currency they can choose. Thank you.
Thank you so much. Thank you so much, our esteemed panel, for answering these questions and making it clear for our NRI customers. We could not answer all of the questions that you all have written down to us. For further queries, you all can write mails to us over the mail IDs that are given. Thank you, Lata ma'am, Ashish sir, and Ajit sir, for a truly insightful conversation. As we celebrate 80 years of independence, today's discussion is also a reminder of how India's journey continues to evolve. From aspiration to opportunity, and from national progress to global possibilities. And wherever in the world we may be, there are ways to stay connected with and participate in India's growth story. A big thank you to everyone who joined us today. The recording and summary of the session will be shared to you over mail. Wishing you and your families a very happy Independence Day. Jai Hind.